Welcome to The Explainer. Today, we are diving into a really fascinating market analysis that suggests a powerful bullish wave is building in the crypto space. And you know what? The main reason for all this optimism? It's probably not what you're thinking.
Okay, this single idea is the key to everything we're about to talk about. It basically translates to just meeting is good news. And this sentiment, which is all about a major geopolitical event, is seen as the single most important thing driving the market right now. So let's unpack exactly why that is.
So here's our roadmap for today. We're going to start with the main conclusion, that bullish outlook, and then dig into the huge geopolitical reason behind it. From there, we'll get into specific trading strategies, see who the smart money is following, and wrap up with what you should be watching next.
All right, first things first, the analysis is crystal clear on this one. The overall market sentiment has totally flipped. A real consensus is building around a bullish or long perspective, not just for crypto, but for other risk assets too.
And this is a huge shift in thinking. You know, the prevailing wisdom among the analysts we're looking at isn't about being cautious and waiting on the sidelines anymore. Nope. The dominant strategy now is to actively hold and even add to long positions. That's a bet that prices are going to keep climbing, and people are positioning themselves for that ride up.
So, what's behind all this confidence? Is it interest rates, earnings reports? Nope. According to this analysis, the single biggest driver is something much bigger, the upcoming US-China summit.
So, why is this summit such a big deal? Well, it breaks down into a few key things. First, just the fact that they're meeting at all, that signals a willingness to cooperate. It removes this giant cloud of uncertainty that's been hanging over the market for a while. And look, if we get any good news on things like chips or tariffs, that will be a massive boost for A shares, for US stocks, and absolutely for crypto. Okay, and this is a really crucial point. You're probably hearing a lot of chatter about interest rate cuts from the Fed and the ECB, right? And yeah, that's good news. But here's the thing. According to this analysis, that's all already priced in. The market is expecting it. The summit, on the other hand, that's the real wild card. It has this huge potential upside that isn't fully baked into the prices yet, and that's what makes it the primary driver right now.
And look, this isn't just a theory. We've seen this play out before. There's a historical precedent for it. A similar positive turn in US-China relations back during the Trump administration, it triggered an incredible 12% in a single day rally for Bitcoin. That just goes to show you how explosive the reaction from the market can be. Okay, so we've covered the why. Now let's get into the how. How does this big macro view actually translate into specific trading strategies for the major cryptos like ETH, BTC, and SOL?
This table really lays it all out. For Ethereum, the view is clearly bullish. Analysts are holding long positions from around $3,800, and they're watching for that key support level between 40.30 and 40.50. For Bitcoin, it's more of a long-term bullish play, where the advice is to get in with low leverage. And for Solana, the strategy is pretty straightforward. Just hold on to those long positions that were opened up at 178 and 190. But, and this is really crucial, this bullish feeling isn't a blanket statement for the whole market. That would be too easy, right? The analysis is actually way more nuanced. While the big dogs like ETH, BTC, and SOL are looking strong, there are definitely exceptions. And a perfect example of this is the CAI token. Here, the sentiment is the complete opposite. So the thinking on CAI is that it's basically running on pure hype and is due for a big correction. In fact, the analyst behind this report is personally holding a short position, meaning they're betting the price will fall from around the 1690 level. They're also giving a heads up to anyone who is long on it. Don't use high leverage. Don't borrow a bunch of money to amplify your bet. It's just a great reminder that you really have to look at every single asset on its own.
So we've got the analyst view, but what about the so-called smart money? Who else is putting their money where their mouth is on this bullish idea? Well, it turns out we're talking about some pretty sophisticated trading algorithms and one very, very big whale.
Just take a look at the performance gap between these two AI trading models. It's pretty wild. On one hand, you have the Shen 1 model, which has nearly doubled its money. We're talking 100% return. On the other hand, a model based on GPT is down 50%. So any guesses on which way the winning AI is betting? Yeah, you got it. It's bullish. And here's a fun little detail about that platform. They're so confident in this data that for the models that are consistently losing money, like that GPT model, they've actually turned on a reverse copy trading feature. So you can literally bet against the failing AI. You can use its bad calls as your own personal guide for what not to do. But it's not just algorithms placing these bets.
Take a look at this number. Over $50 million. That's how much a single high-conviction trader, what we call a whale, is holding in long positions right now. And analysts are watching this person very closely.
So let's break down this whale's strategy, because it's pretty impressive. They're already sitting on an unrealized profit of $20 million, and they're not cashing out. They're continuously adding to their long positions. But here's the really smart part. They're using very low leverage, only between 5 and 9x. So yeah, their bets are amplified, but it's not reckless. Their liquidation price for Bitcoin is all the way down at $79,000. That means their risk of getting wiped out is just incredibly low. This isn't gambling, it's a confident, calculated, and really solid strategy.
Okay, so we've covered the sentiment, the big reason why, and who the major players are. So what does this all mean for you? Let's wrap things up by looking at the key dates and factors that you absolutely need to keep on your radar over the next couple of weeks.
All right, 2 key dates to mark on your calendar. First up is October 30th. That's when we get the interest rate decisions from both the US Federal Reserve and the European Central Bank. Then, just a few days later, on November 3rd, that AI trading experiment we talked about comes to an end, so we'll get the final report card on how those bots did.
And beyond those specific dates, there are 2 other factors to keep in the back of your mind. First, keep an eye on the gold market. If gold starts rallying really hard, it could potentially pull some money away from crypto. And second, listen for any political chatter about crypto. Like recent comments from Donald Trump. That kind of stuff can always inject a little bit of excitement and volatility into the market. So, when you put it all together, what's the big takeaway? Well, we have a really clear bullish case that's being driven by geopolitics. It's backed up by high-performing AI, and it's being copied by at least one massive whale. Which really just leaves us with one final question. With all this smart money betting so big, is the market just correctly pricing in a new wave of optimism? Or is there a hidden risk that maybe everyone is missing?